Hello, everyone. Welcome to the webinar, which is held by the London School of Emerging Technology. And we are going to be looking into the AI gold rush today and what investors want in the future of AI. My name's Annabelle. I'm your host today. And I'm really excited to introduce our speaker, Daniel Hellman. So he is a founder, operator, and advisor in tech startups. He's been doing this for over 20 years across multiple industries. And his experience ranges from day one startups to international scaling of global companies. So I'm really excited to introduce Daniel, and I'll let Daniel take over from here. So we're live and ready to begin, Daniel. So just to get us started, why is capital flooding into AI faster than any previous startup trend?
Thank you, Annabelle, and great to be here. As Annabelle mentioned, 20 plus years in early stage businesses, but the market is shifting very quickly, mostly because of AI. It's not just creating a gold rush, it's creating AI as a tool, and we're seeing huge economical platform shift. Think about it this way. Every 10, 15 years, there's a new platform that emerges. Internet, then mobile, then cloud computing, and now AI. When these shifts happen, capital moves very, very aggressively, especially because those that go in first get the biggest gains. And that's the important thing to understand here. Investors aren't betting on AI because it's fashionable or because of the technology. They're betting on because of the outcomes and what it can do to reshape labor, productivity, software economics, and actually entire industries. And I want to give you perspective on what they're looking for. They're looking for, they're thinking about what gets funded, what doesn't, how they can impact the future. And the winners in this cycle will be those that own data sets, distribution, workflows. Let's go back to the numbers slide a second, Annabelle, because I think there's some important things to recap on here. The numbers actually are pretty staggering. In 2025, total global venture capital funding was around 425 billion. And AI swallowed up half of that. That's over 200 billion for AI specifically, which completely dwarfed the next two sectors, which were health and biotech and fintech. But what matters more here is actually not just the scale, but the speed. Historically, platforms take years to attract serious capital, but AI has compressed that cycle dramatically. Valuations for some of the leading AI companies have effectively doubled every 6 to 9 months. Just think of it this way. OpenAI had a market valuation go from 29 billion to 800 billion in a fraction of the time that it took some of the internet giants of the 2000s to reach similar scales. It's unprecedented. And why? Because investors are seeing something they very rarely see: instant productivity gains. And we can think about that even from our daily use of what we use ChatGPT for, and how would we have done those kind of things before. And if AI can help take one employee's worth of output and turn it into 2 or 3, that's where investors get particularly excited. So that's why AI is flooding in huge, huge numbers. But why is it happening? Well, AI isn't a feature anymore. Investors are increasingly see AI as a business model. In the SaaS era, software helped humans work faster. But in the AI era, investors are betting the software will replace parts of the human labor altogether. And that changes the economics completely, which is why VCs traditionally love AI native businesses, typically lower headcount, faster scaling, always global in terms of their reach and potential, and they have huge margins. Mark Anderson, who's a very, very famous VC, said software is eating the world, and now investors believe that AI is eating software. The other thing that's happening here, which is why money's coming into AI in such a big way, is VCs fear monopoly. Technology investors know that platform companies dominate their ecosystem. Think about it this way: Google dominates search, Amazon dominates cloud, Meta dominates social distribution. So investors automatically ask, who's going to dominate AI infrastructure? Who's going to dominate AI workflows, operating systems, data? And that's why companies like OpenAI, Anthropic, NVIDIA attract huge valuations. But there's also an important lesson for any founder in this space. Investors are no longer impressed by anything that has AI-powered, AI-enabled branding on their marketing. Investors want to see proprietary advantage. They want to see unique data. They want to see distribution and something that's defensible. And that's what they really want to see. And that's where they plow money when they see that. Next slide, please.
That's really interesting. Yeah, that actually surprises me that it's overtaken kind of biotech and the health industries. I always thought they would be the ones right at the top when it came to kind of investing.
Yeah, it's quite staggering.
Yeah, it really is. Like, the numbers are incredible. So what would you say are the 4 biggest AI growth areas investors are focusing on right now, Daniel?
Yeah, as we can see here, we've listed some of these kind of 4 major categories. And we can go a little bit into each one. AI infrastructure. So this is where there's big value that's already been created. NVIDIA, again, is a good one to mention. They became one of the biggest companies, most valuable companies in the world, because fundamentally every company that builds something with AI needs to use their chips and the infrastructure to compute. So straight away, they became critical to building AI. And during every gold rush, infrastructure providers often make the most reliable money. So of course, here you also have people like the Googles, the Microsofts, the Amazons. They're all playing in this space. Cybersecurity, very big names, and you need a lot of money to play in this particular area. Cybersecurity, we know it from our personal lives, where we might put an antivirus on our computer. But actually, as AI adoption increases, everything becomes much more vulnerable. Attack surfaces increase too. The hackers have more agents, more bots, unlimited hacking opportunity. So cybersecurity is a real big category within this ecosystem, because enterprises especially urgently need threat detection, fraud prevention, etc., etc. And there's some big names here who may not be known to everyone: CrowdStrike, Palo Alto, Darktrace, who are helping protect businesses, individuals, etc., from the constant scale of what AI is bringing. Healthcare.
As a founder myself, sorry, Daniel, I was just going to say that I have my own website. It's like a health-based site, and I've noticed that there's been a sudden increase over the last kind of 12 months in the number of times that people are trying to hack it, or bots are trying to hack it. It's becoming like a real serious issue. And I mean, I'm very small in the industry, but for me, it's, even though I'm a small player, it has become a real serious issue for me.
The threat levels are relentless, whether you're an individual at home for personal use, whether you're a small business, or all the way up to big enterprises, and of course government. Think about how governments need to protect lots of assets that are confidential, and that's why cybersecurity is a big area.
Mm-hmm.
As is healthcare. Now, of course, we all think of the NHS. We all think of the NHS as being this big, inefficient body. You wouldn't be surprised that actually healthcare is inefficient in most of the world, and it's full of administrative issues, and that's why investors actually love this particular area, because the markets are enormous. It's also something that everybody in their life will need constantly, from birth all the way through. So the costs are generally enormous in healthcare. The workflows and how companies operate are very outdated, very legacy. And therefore, there's huge automation and big gains to be had for companies that can crack the healthcare sector. Think, for example, AI diagnostics, drug discovery, which is becoming very popular, clinical automation. All of these things are attracting big capital. The last one, vertical AI, simply means industry-specific AI. So generic AI is a very crowded space. Software or tools that can do things for anyone. But as soon as you get into vertical AI, it becomes a lot more defensible. It's more niche, more focused, but still in very, very large markets. And that's why you see companies becoming unicorn within a couple of years when they manage to get real traction and add real value in sectors such as legal and healthcare and HR, etc. Because there's big problems in those areas that AI can solve. But of course, industry-specific workflows then create their own defensive moats. And that's where these companies are becoming real integral parts to building on top of the AI infrastructure level. And actually the future, if you look at vertical AI, just before we finish, the future might not belong to one massive AI company. It may belong to thousands of smaller industry-specific vertical AI specialized companies. I think it might be useful.
That makes a lot of sense.
Annabelle, sorry, I think it might be useful just to go back to the slide with the agentic, the agents. I think the one before this one, because I think this is something that people probably.
This one.
People are probably, yeah. People, thank you. People are probably hearing a lot about
no problem.
AI agents. People are probably hearing a lot about AI agents and what do they actually mean. And I think this is a real good example of where AI is making a difference today. As we said, AI is no longer a feature. Investors are already seeing AI as a business model. And here you've got agents that are actually doing the work of what humans would be doing. Now, the market is shifting from chatbots. I'm sure you've used it, and so have I, to get simple information, which we used to complain about. But actually, now that you can't get people on the phone when you want to answer a query, chatbots are becoming better and quicker and faster and easier to get information. But agents are different to chatbots. There's a huge difference, in fact. Chatbot will answer a question, whereas an agent will complete a whole workflow. And that distinction is enormous. And actually, this is where investors become obsessed with agents that can review an input. So maybe a question from me as a customer, but then they can make decisions. They can coordinate several actions. They can execute a whole bunch of workflows that I need and operate with often minimal or maybe zero human input. And the reason they love this particular space is because human labor is usually one of, if not the biggest cost in any business. And if an AI agent can reduce that labor dependency, the economic upsides are huge. So for example, an AI support agent won't just answer my question. It can verify who I am securely. It can access internal systems to know all about my history as a customer. It can process a refund if I need to, escalate an issue internally, and complete all of that workflow potentially autonomously. And if it does it well,
done all of that.
Exactly.
All of that with Amazon, with the Amazon one.
Absolutely. And if it works for the customer, then it's a great way to give customer value at a snip of the cost of what it would usually entail for a human support agent to do. And that's why investors love multi-agent systems. But actually, if you take my example is for my own personal use, even more importantly, and where we're seeing them move very quick is within big companies. Big companies that have huge infrastructure of people all over the world have very fragmented workflows on how they do things. And often those workflows are by humans. So if AI agents can orchestrate those workflows into a system that will use multi-bots or multi-agents, suddenly you have efficiency and you're avoiding that human bottleneck, which is why investors love this particular part of AI. Thank you for
makes a lot of sense. Yep. I've certainly used the Amazon agent where I've been able to arrange for a refund and all sorts of different things, and it's been much easier than having to speak with someone on the phone, I must admit. And
absolutely.
Just out of interest, I mean, which sectors do you think are finding kind of it the hardest to attract funding at the moment in the AI-driven market? Like, what no longer gets funded easily?
Yeah, it's actually not so much sectors, because AI is making its way into all different sectors, like we said before, whether it's legal, construction, HR, etc. It's more about the type of product or the type of tool that is struggling to get funding. A couple of years ago, any pitch with AI would get interest and may raise money, but that's over now. And investors have seen thousands of AI startups. Most are not differentiated and also don't have something that the investors see as real tangible value today, but also nothing that's defensible, which is important for them. And one of the biggest problems here is the wrapper, which says at the bottom, which essentially means companies are building stuff on top of ChatGPT that they put a different UI or UX. So to you and I, it looks different, but it's delivering something using that underlying ChatGPT technology. They can move very quickly, launch something quickly, but it's not very defensible. And what that means is that anytime OpenAI or Anthropic or any of these companies want to create that product, they'll completely put that business out. And we've seen that happen already. Businesses that might have attracted funding early on, suddenly Claude will develop a new tool for developers, and that business might become not redundant, but slightly less interesting, especially if Claude or ChatGPT offer it as part of a free service or built into their subscription model. So that's a big problem.
Yeah, I subscribe to ChatGPT for £20 a month. It's definitely a good investment.
Absolutely, and they keep on adding the features. Yeah, and they keep on adding features. So if you had a feature that you would have subscribed to a different company for, you'll probably stay with ChatGPT. If you don't mind going back to the slide, the other one. No, it's okay. There we go.
This one.
Another.
Yeah.
No. Sorry.
It's jumping a bit quicker. Yeah, this was the one you wanted, wasn't it?
Thank you.
Yeah. No problem.
The other thing that matters to VCs more than it ever did before, especially at the early stage, is go to market. Go to market. GTM is essentially revenue, and they want to see revenue from much earlier than they used to. And often in the world of AI, where maybe the product or the tool is built by very technical founders, they obsess about the quality of the product, but sometimes ignoring distribution. And actually, those that think about distribution from day one usually win in this area. What investors want to know today is, as well as your big vision and the problem you're solving, they want to know about how are you going to acquire customers? Where are you going to find them? How are you going to get them? How are you going to get them to sign up? How are you going to keep them? Retention is equally as important. They don't want someone to sign up for 1 month and then leave. The quality of that revenue is dictated by that ability to attract and keep the customer, and of course the unit economics. So you're not going to pay more to get the customer than the customer comes and gives to you, and your market positioning. And this is really, really important, the go-to-market. People shouldn't ignore it. They should think of it from day one. Then we talk about proprietary data. So AI models are becoming more commoditized. So the long-term value increasingly comes from how can I take those models that I might be building on top of to create something proprietary, whether it's workflows, whether it's integrating into customers, so integrating into big enterprises, or am I creating any unique data set? So even though I'm using the infrastructure of the main commoditized LLMs, is there something I'm doing to create a unique data set on top of that makes me stand out and gives me a defensibility? And of course, the last one, copycat consumer AI. It's because you can build things a lot quicker, not just from a perspective of tooling things, developing things, launching apps, etc. You can build a website within an hour. Copycat happens all the time, but actually defensibility and real value is much harder to copy. And investors are very aware of these kind of things. So some of the red flags.
Sorry. No, go ahead, Daniel, please.
Thank you. There are some things that investors repeatedly see. I think raising too early is something that used to be quite fashionable. But actually now the investment community want to see traction. They want to see not just an idea with a prototype or a demo, because things are much easier to build, much easier to take to market, much easier to validate. They're seeing companies come to them with already revenue and trusted revenue. So they want to see demand. They want to see retention. They want to see essentially product market fit. which is a very popular word in the startup world. It's essentially something that validates the fact that what you're building has a fit to your target market. And the fit might be returning customers over time, customers paying you, etc., etc. So they want to see that very early on. So the traction, they almost demand nowadays to show them traction, because they're seeing other companies come to them with that ability of already a business model and revenue. Think of it about this way: you're a startup and you're building a bus. They don't want to see you build the bus. They want to see the bus moving, and they want to see customers hopping on the bus. They want to see customers staying on the bus. And when you've proven that to them, you can say, well, if you give me the fuel, which is the money that you want from the VC, we can get the bus to our destination much quicker. That's when they want to come in.
It's a great way of explaining it. Yeah, makes a lot of sense.
Overbuilding features. I think this is not just with AI, it's with any startup. You become obsessed with giving more value and maybe making the product complex. Founders sometimes think complexity of product creates value. Actually, sometimes the opposite is true. The best startups find a problem, which might be very simple, but it's very painful, and they work to solve that problem exceptionally well, sometimes with fewer features. And this also helps them move faster. So again, the faster you can solve part of that problem even, the faster you can get a business up and running, the model validated, show some traction, and then go and raise money. Weak distribution, again, go to market. Founders underestimate how difficult distribution really is. If I build it, they will come. That doesn't always happen, and investors don't like that kind of mentality. So building technology can sometimes actually be easier than acquiring a customer and retaining that customer. So the best founders do really have to think of how they will get those customers from day one. Could be partnerships, communities, content, outbound sales if you're working with large enterprises. Lots of different ways of thinking about how that revenue engine will be built. And finally, valuation obsession. Again, a little bit of a vanity metric. Yeah. Higher valuation doesn't always guarantee success. In fact, many startups raise inflated rounds based on overpromising and then become trapped. And that's a very difficult place to come from. So founders that can think about building quickly, survival, maybe even bootstrapping at the beginning, showing velocity and speed, learning on the go, and think with a long-term mindset, sometimes can come to the market with a much more interesting proposition for the VC community, as opposed to raising early.
Thanks so much, Daniel. And I mean, what do you think, or what do you believe will be the next wave of billion-dollar kind of AI companies?
We're seeing them already. I think the next unicorns will come from very different or look very different to traditional software companies. They'll operate with very small teams, with high automation from the get-go. They will move extremely fast, iterate very fast, pivot, whatever they need to do. And AI will be embedded throughout. So from day one, they will have AI, from building product, launching product, algorithms, to even hiring, even sales. They might have AI sales agents. They're thinking AI with everything they do. A big example here is Lovable, which you might know, a company that went public. Within 1 month, it hit $1 million ARR. Within 2 months, it hit 10 million ARR, and it crossed 100 million within 8 months.
That's just incredible. Incredible speed.
Incredible speed. And another example, Midjourney, probably very famous for its headcount. It hit 100 million. Yeah, so they hit 100 million ARR within a year with a team of roughly 20 people. And when
a team of 20, that's all they had.
Yeah.
Wow.
And when venture sees this, when VCs see this, that changes the economics completely. It sets a benchmark for what the investment community look for. So if you're trying to play in those areas and wanting to raise big rounds and grow quickly, you've got to show similar vision and similar, I would say, basic AI building blocks to what those kind of leaders are showing, those leading companies at the moment are showing.
Kind of use them as a model.
Sorry?
Would you say to kind of use those companies as a model for how you structure your own?
I think it's really hard to say use them as a model because it really depends on what you're doing. Those particular companies had a very successful go-to-market strategy, which is called product-led growth, and not everyone can do that. So if you're B2C or B2B, there's all different models, but I think VCs expect you to think AI first in most of your business modeling, really, not just your product. And that's where being able to show your thinking outside of the box with AI, with other things, can help show them that not only do you have the right product for the right market, but also you can grow this without needing 1,000 people in year one. And their investment can go towards technology rather than people. And they like that. They like that a lot. Yeah.
And so I think the next thing was kind of, was there anything else on this slide? Sorry, before I move on.
No, I think we can move on. I'd like to share a quick example, which I think sometimes makes it more real.
Yeah, absolutely. Absolutely.
So one of the best ways to understand AI is through workflow transformation. And a lot of that comes through the agentic or the AI agents that we spoke about earlier. This is an example from a finance firm who, like many in their industry, had a highly repetitive auditing process. And it typically took approximately 20 hours a week of each employee. So nearly half of all employee time was taken up on the auditing process. The company implemented multi-agents to essentially carry out the workflows, duplicate what the humans were doing. And the result was unbelievable. But it wasn't magic. It was just practical automation. It was learning what they knew about what their teams were doing and putting that into practice. So document processing, anomaly detection, where's errors along the way, how do you reconcile, and of course reporting at the end. These are things they've been doing for years. Being able to translate that into AI agents meant that within 90 days, you can see some of the results here. They saved substantial time, billable hours were improved, and revenue expanded because their skilled staff could do work of higher value. So this was not about getting rid of people. This was about enabling their workforce to do higher value work by taking the automated repetitive tasks out of their daily routine. And that's what customers love, and it's what investors love. It has clear economic impact, a measurable ROI, if you like.
Yeah.
And this is important. Founders often think they need to build something magical, exciting, revolutionary, but actually some of the strongest AI businesses are solving boring, operational, repetitive problems, but doing it exceptionally well. And that's where actually their customers get big value, and ultimately the VCs see big value.
And so I think we're just moving on to kind of a few questions and answers. I know there's quite a few questions on here, and you've probably got a lot to say about each one, so not sure if we'll cover them all, but starting with the first one, what kind of AI startups do you think investors are really excited about right now?
Yeah, so I think investors are excited about AI startups in most categories. Every category has an opportunity for AI to make a difference. They look at AI native companies deeply focused in large markets with big problems, whether that's agentic, whether it's vertical AI infrastructure. So it's quite a broad range. But what I'd like to say is that and this is a critical ingredient, and it has nothing to do with code or AI. It's probably more to do with founders. VCs love founders that have a product market fit or a founder market fit. In other words, the founder knows the market they're in. They know the customers they want to serve. They know the problem. And what more, they're passionate about solving the problem. Maybe the founders experienced the problem themselves. They've worked in that industry. Or maybe they understand it through research and learning. But they have a solution to fixing that problem, substantially better to what there is on the market. And they know the ecosystem they're entering. And they like founders that bring that energy to them, because it's very easy to come up with a solution to any old problem. Yes. But actually understanding the ecosystem and understanding the complexities within that ecosystem that you're entering is fundamental. And of course, the passion and the drive is something they look for every time, because building anything of substantial value is hard. So they want people that are weirdly determined, strangely determined to smash through those hurdles. And that's what they like to back.
And what about the fact, I mean, I've heard a lot just in general about how it's really important for the founder to be quite public facing now. That's something that investors also look for. Would you agree with that?
I think, again, this can depend on the type of maybe vertical you're working in, also about your personality. I always feel that founders shouldn't try to be something they're not. Some founders like to build in public. It's part of the marketing. It can be part of their networking to raise money. So actually, when you're raising money, the network of VCs can sometimes feel far away. If you're able to use social media as a way for you to build that network, that's one way founders love to do that. So I think it really depends on how public they want to be. I always feel that as a founder, your job should be first and foremost to build that company and focus on the business. But if part of that is having a public persona that helps you do that, I think as long as you're not maybe dedicating too much time to it, again, depending on the sector and what you're trying to achieve, it could be a good way to do it.
Thank you. And I'm going to move on to the last question next, because I'm sure you've got a lot to say about this one. What trends kind of in AI do you think are being overhyped at the moment?
Yeah, so I think we spoke about it briefly, kind of AI for the sake of AI, putting AI on marketing and not being able to back that up. Investors are very quick to see through these things and do their diligence and see if a company isn't maybe as AI led as they want you to believe. And I think that's where those generic wrappers are also becoming they are overhyped. If your business is just an API on top of a LLM, and you're using someone else's model and you have no real moat to protect your business model, that's not going to land well with investors. And I think also things that don't have a real ROI. ROI is a really important thing to think about from day one, like distribution. If I'm solving a problem, can I put a figure behind that problem? Can I monetize that problem? Because if you can't, then it's going to be hard to convince someone that the problem is big enough to at some point be able to be worth a multi-billion pound company. I think the other thing is being obsessed with model size, and this is where it comes to the LLMs, building massive foundational models. First of all, it's really a playing field for the big companies and for billionaires, if you like. But also people are shifting away from that because it's expensive to build those foundation models. So investors actually prefer something smaller, something highly focused, highly efficient, but as long as it still has a big market opportunity, they quite like that. Another thing, chatbots, they went through their... Oh, sorry, go on.
I was just going to jump in very quickly, just for maybe some of the people that are attending might not be quite as knowledgeable as you. ROI, I think most people know means return of investment, but I was just wondering some of the other acronyms you've used, like LLMs, and there was another one a bit earlier. Could you just explain a little bit more about what that means, just for people that maybe
Yeah, of course. So
aren't as knowledgeable?
yeah, ROI, return on investment. Essentially, if a customer is paying you 100, maybe what is can you calculate, or can you at least hypothesize about the value you're going to give back to that customer? Obviously, if it's going to be less than 100, you may not find that many customers. So you have to think about these things from day one. LLMs are the large language models, which we're typically using in places like Claude or ChatGPT. We're using their large language models to help us with whatever we need. And that's where a lot of the wrappers are built on top of those LLMs. And that's where investors don't see much value if you're necessarily just building something simple, a thin layer on top of a large language model, because the real value is in the large language model, unless you can somehow create your wrapper with something defensible, something unique, something particularly incentivizing for your customer. But large language model is essentially the big guys who are creating the chat GPTs and the more public interfaces we're seeing. They're the databases that everything is built on. So yeah, I think trends. I was going to touch on the chatbots of the world. Those kind of things are trends that have probably been overhyped to a degree, and now have become a little bit last year's news. As I said, it's moving fast into the AI agent space, which I don't believe is overhyped. I think there's a reason and a very concrete ROI as to why VCs are backing these companies, because there's a very clear understanding that if you take something that today takes 5 human beings half of their time to do, and you can clearly show a time and a cost saving, and more importantly, an improvement in the output. So, if we're talking about the auditing example before, if those AI agents are built properly, they'll probably do quicker work, but also better work than human beings with less errors. So if the quality of the output is going to be better than what the human labor market can provide, then that's where I think things like AI agents are not being overhyped. They've got a real big part to play in how industries and enterprises will do business moving forward.
And is there any industries in particular you think are maybe being overhyped? Like, I mean, I've heard a lot about health and AI, for example.
I think it's too early to say if any specific industries are overhyped, because the one thing to remember is we're very early on in the AI revolution. Even though some companies, especially very technical companies, have been using AI for a long time, in terms of what it's being able to do now, we're still very early, and adoption is relatively low. So I think there's AI potential in every industry, and I think we're nowhere near the tipping point of what we're trying to do. So I think that it's across industries, it's across countries. There's really no barrier right now, and I think to our audience, this is the perfect time to build. It's the perfect time to think about how to solve problems and how to be AI native. And if you've got a great product and a great idea, it could be the perfect time to raise money.
Now that makes sense. And so I'm going to jump to the second question. I know we briefly touched on this already earlier on, but kind of, are there any reasons why you think many AI startups fail to raise money? So they've got a product, they've shown some type of revenue, they've shown a business model, but they just can't raise any investment.
I think first thing to note is that very few companies raise money, statistically speaking. So you're always fighting. It's a challenge. The statistics aren't friendly, but as a founder, you have to barge through that and not let it put you off. I think one of the biggest I see, and it's going to sound quite simple, is that many of companies going to raise money early are not VC backable. They don't have a vision that necessarily translates into what VCs see as a huge outcome. And there's something to remember here or learn is that VCs are essentially placing bets on 10 companies, of which they'll usually see one, at most two, actually go for multi-billion pound exit. So they're placing bets, and those bets are big bets. So convincing them that you're one of the 10 that they might invest from their fund is not easy. The competition is high, but also I think there are a lot of people out there who think VC is the right place for them to go, but it's not. And I've worked with companies where when I first start working with them and I learn about the business and what they want to do, I tend to be quite transparent and say, you're not investable by a VC. And it's not necessarily because they don't believe they can sell for multi-billion. It might be because the area they're building in, the type of product they're building in, but they won't be a VC fit. And for that reason, they might not even get a foot through the door. So I think that's one of the things people should ask themselves very seriously. What are they trying to build? What's the outcome? And am I the right fit for a VC? And there's lots of good resource out there on what VCs look for. And I think the other one is around the challenge of showing an all-rounded approach to a VC, from a product to a team to traction. It's getting harder and harder to show all of those, to essentially tick the boxes that the VCs want to see. But it's something that people can learn, something people can improve on. And I think if you've got a vision to go about it and the right mentality, then perseverance is the biggest attribute that I would say a founder needs to have. And that's the same with raising money. And I would also, I think, like to add, because people sometimes find this maybe something they're surprised by, raising money can be a full-time job. So how you manage that alongside building your startup without slowing down is difficult. And people often think they can put 20% of their time into it. Unless you have a network that's ready to go and people you know, or a previous exit history, going into that world and trying to raise money is 50% of your time minimal. And so can take 6 to 12 months. People also don't find that quite scary, but it's a process, and it can take 6 to 12 months. So be prepared for that, and be prepared for what you'll need to do, and how much time you need to focus on it as a founder.
I mean, based on what you just said, would you say that building a network first would be a good way of going about things?
I wouldn't say build a network first. I think building a network is something you should think of if you think you are going to require and want VC funding. And part of that is building a network. And I would say it's almost better to build that network early rather than go cold calling, trying to get money. And you can build that network in lots of different ways, through your own community, if you know other founders, through social engagement or social media engagement with VCs, other founders, going to events. There are ways to develop the network, but it will stand you in good stead when you eventually come and say, I'm now ready to pitch, and I've got everything I need to go and raise that first or second round. Having that network is critical, and it can fast track by months.
That's interesting, and kind of leads us into the other question on this slide, which is, what are the key mistakes do you feel that founders make when they're positioning themselves? So that might be while they're building their network, and then obviously moving into kind of positioning themselves for getting the actual VC funding, investment interest there.
Yeah, I think I'm not sure it's about how they position themselves. I think it's more around having the fundamentals ready to go and raise. So it's being prepared to raise. And that might involve having particular traction already, having a data room full of information that investors want to see, financial projections, your current financials, all the metrics that VCs look for, like we already mentioned, customer acquisition, retention, unit economics, and margins. You really have to have a very thorough business plan with an already moving bus, let's call it, that you've not just started to build. It's been built, it's running, and you have to have a very complete offering so that you can answer all of the challenges and questions that will be asked of you. So I'm not sure it's necessarily positioning. I think it's more about be prepared, and that and again that involves a lot of background work, a lot of prep work, as well as getting that network ready before you even go to market, and start raising your round. But I always like to say that you shouldn't think of raising money as the end goal or your primary objective. The primary objective and the end goal should be to build something that customers want. And if you do that in the right area being where VCs think it could be something that has infinite scale and can grow exponentially very quickly, then you might be the right fit for a VC. But I would say I often see people saying, I want to build something that's VC investable. And I would sometimes say that's the wrong way of thinking about it, because you should be building something that, sometimes it's the wrong mindset. It's good to know maybe what boxes VCs want to look for. It might help you improve your way of thinking about your company and the potential of your company and how to build that company. But you should also really start with, is there a problem I've identified? Do I think it's a big problem? Am I passionate enough to go and solve that problem? And then if VC can be part of that journey and I need it to be part of that journey, then great. Go and get that VC funding. The other way around tends to create a lot of delays. People always, I've seen people try and find the perfect company to build that ticks every box that the VCs want in areas they don't know, they don't understand, they don't have a passion for. And I think that's the wrong way to do it.
Yeah, no, that makes a lot of sense. And I mean, personally, I know you've had many companies, but my own personal experience, just as a very small founder, is that, you know, I've focused on an area where I've got a lot of personal experience, and so it gives me a differentiator from the multi-million-pound companies that maybe are doing something along the same lines, because I'm kind of unique as the founder because of the reasons why I'm doing it. How important do you think that is?
You mean having that kind of insight into what you're solving and doing it in your own way?
Having a kind of being able to, the fact that your background and experience makes you a differentiator in, you know, the industry. So I think everything at the moment's so competitive, that you need to stand out a little bit. There needs to be a reason why you can't be copied, because maybe they can copy the model to a degree, but they can't replicate the founder, because that person is, you know, different for whatever specific reasons. Maybe if it's legal, maybe somebody who's trained to be a solicitor, you know, that wants to be a solicitor, for example, of some reason they've not been able to get into that industry, you know, that into that role, so then they've decided to pivot into maybe AI legal side of things, just as an example.
I think knowing the industry you're going to operate in, and if you're already operating it and you know the problem and you know the ecosystem, is huge. And that's why you often see some of the greatest startups come from people who have worked in the industry, in a company for several years, and they've spotted a problem that they really think not only can help their existing employee, but it can help the whole industry. And then they go and build that product, and it works really well because they understand the fundamentals. They've experienced the pain, and that's really important. They can empathize because they experience the pain that they're solving. I think that's a huge thing. I think where the founder becomes maybe the unique differentiator probably depends on the type of business. So if you're a founder-led business, and again, this might relate to building in public and where you have to have a public persona, maybe that's where actually that founder becomes a differentiator. But it really depends on what you're building. If you're building something that's going to be sold to hundreds of thousands of customers in volume, maybe the founder can't really be such a unique differentiator that all of those customers are going to buy from that business just because of that founder. and I guess this is why. But sometimes that founder or that investor dynamic can help. That's why we see a lot of tech products being backed by athletes and celebrities, right? They want to create the differentiator as look who's backing us, look who's using our products, and I think that mostly works in B2C. You see a lot of that in B2C. A perfect example is Rory McIlroy, who recently won the Masters in golf, was wearing a Whoop wristband, and that's part of the attraction. He's not just an ambassador; he also invests in them, and that's where kind of a founder or celebrity-led endorsement is obviously can play a big role in some startups in some fields.
Okay, yeah, I mean, I think we've all seen that with celebrities out there backing things, and obviously that attracts media attention as well, which is super helpful in this industry. And I mean, just out of interest, obviously, I know you've worked in a lot of different industries yourself. I mean, could you just tell us a little bit more, maybe about yourself and what the industries you've worked in?
Yeah, of course. I've been lucky that I've worked with a lot of different companies and different founders and supported them, and it's been really interesting, all the way from retail, so online in-store technologies, logistics, warehousing, then video companies where I had some of my best, if you like, exposure to AI, working with voice and video AI creation companies, food technology, and I would say 80% of my time has been spent on B2B, so business to business, and usually selling to tier 1 and tier 2 companies, so selling big technology to big companies. But as I said, I've had exposure to B2C and smaller scale, and it's given me a real interesting broad perspective, if you like, on different models, business models, that is. Some companies that we did go after VC and raise some money, which was great and helped the company scale. Sometimes not going after VC money and why that was the right choice. So it's been a really, a quite varied, I would say, and generalist experience and career to date. And it's been helped me learn along the way.
Thank you so much for joining us today, Daniel. It's been really, really interesting, and I'm sure everybody's taken a lot away from this. If anyone wants information, we will be further away. Keep your eye open for those. Obviously, you can go to the website for the London School of Emerging Technology. Have a look on there. There's a few events on there going on as well that might be of interest. And I'm really looking forward to the next webinar. Again, thank you so much for joining us, Daniel, and I hope this has been really helpful for everybody.
Thank you, Annabelle. Been a pleasure.
All right, I'm going to wrap things up just a little bit early now, but as I said, if you are looking for more information about these things, then please, feel free to take a look at the website and the events that we have going on. We've got some really exciting events coming up. So we're doing an artificial intelligence essentials. If you just want a basic understanding, that's just a 1 hour event if you just want something quick to attend. And we are also running workshops as well. So if you want something a little bit more involved, then check out some of the workshops as well. And if you feel ready to actually get yourself going, then there's various courses and programs that may be of interest, and we run boot camps. So you can also attend those. Some of these boot camps can be in person as well as online. So if you prefer that, do take a look at the boot camps we've got going on. Just a few. We've got a cybersecurity analyst boot camp that might be of interest to some of the people that have attended today in particular. And that's going to provide you with some hands-on skills in testing and threat assessment, security framework implementation, so you can understand a little bit more about how to become kind of a cybersecurity professional. And there are even boot camps that we have running on things like how to crack interviews with confidence. That's our interview mastery boot camp. And so you can gain some kind of expert insights there, and also understand kind of how to approach interviews. Now, AI is obviously impacting so many industries and impacting kind of even getting to interview now. So if that's something that you need more information about, that's another boot camp that might be of interest. But I won't go through them all because we have so many. I mean, another one is our development ops engineer boot camp. So you can master kind of your essential development ops skills, and it's hands-on and designed by industry experts. So that will fast track you into that industry and that becoming a development ops professional, if that's something you want to do. So, you know, your AI journey, it starts now with LSET. Take a look, get yourself onto one of the courses or one of the boot camps, or just attend our next webinar. And so I'm just going to thank you all for attending today. It's been an absolute pleasure to host this with Daniel, and really looking forward to hosting the next webinar for the London School of Emerging Technology. Really excited about what's going on with AI. And I think it's impacting us all, impacting every area of all of our lives now. So appreciation of that is definitely there for me. So I also find this really interesting. So thank you so much, and looking forward to seeing you at the next one.